from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and welcome back to another edition of Bloomberg Technology. Coming up in the next hour, Doordash posts record orders on the heels of a pandemic-induced growth spurt. I'll be speaking with co-founder and CEO Tony Xu about customers' growing appetite for takeout and future plans for expansion. Plus, DNA testing company 23andMe reports its first earnings since going public. I'll catch up with CEO Ann Wojcicki about how the company is positioning itself to play a larger role in your healthcare. And fintech front and center as competition heats up, how customers are looking for new ways to manage their money as the world sees a digital transformation. I'll sit down with Sofi CEO Anthony Noto about the company's outlook and their move into crypto. We'll get to all of those guests soon, but first let's get a recap on the trading day with our Bloomberg News Markets reporter, Kriti Gupta in New York. Kriti, how did we end the week?
Well, Emily, we ended the week still at record highs, even as we start to see the macro outlook get a little bit cloudy. Check this out. This is the growth versus value trade. You are starting to see growth just outperform just a little bit on a weekly basis towards the end. That's that green bar there. Really shows you, though, that the momentum, whether it's value, whether it's growth, it's slowing down a little bit. And Treasuries sending that same message as the curve gets a little bit flatter. I want to go on a sector basis, though, and really show you what this kind of looks like on an intraday basis. You did, of course, have the S&P 500 in the green, the NASDAQ underperforming today, but you also had the 10-year yield down 8 basis points. So once again, some money going into treasuries here, not a ton of money going into big tech, down at 0.3%. Looking at even more sectors, dissect that even more because it's no longer one big tech trade. You have semiconductors, you have Bitcoin, all sending these different messages. Semiconductors and Bitcoin higher on the day. Well, Bitcoin lower now, but it was higher on the day in the session. And then you have semiconductors up as well. NASDAQ Golden Dragon Index, those Chinese ADRs, down on the day. And of course, those NASDAQ biotechs that have been performing really well, ending about flat. So once again, the tech trade is diverging. People looking at the micro story. And speaking of the micro story, I've told you the macro. Let's get to Ed Ludlow for some of those stock stories.
Friday the 13th. Freaky. Maybe bad luck for some section of the market, though. Kriti's talking there about modest gains on the S&P 500, the NASDAQ 100. Just wanted to point out while we're here that actually in previous Friday the 13th, November and March of last year, we saw real outsized gains, but the market a little bit muted today. One area of the market that did have bad luck, though, Emily, electric vehicle stocks. There's so many stories sort of going around that sector. A lot of it's SPAC related. You see weakness there in Nikola, down 4.2%. Lordstown, down 6.5% after reaffirming that going concern. It hasn't got enough money to get its car to production. You also see Fisker down after it entered the convertibles market, and all of that being felt by Tesla. So a pocket of weakness in the market there on this Friday the 13th. And I want to talk a little bit finally about Disney. So much euphoria in the last couple of days about strong earnings, bullish outlook. What? Don't worry about Delta variant. So we opened up 4.5% at the start of Friday, talking about a biggest gain in 5 months. By the time we got to the close, we'd lost all enthusiasm for this stock, down just a modest 1%. You wonder whether the markets are kind of taking a beat at the end of the week, or if they're looking at Disney and thinking, hold on, were these numbers as good as they look? Wall Street was certainly pleased. Analysts really raving about the stock on Friday. Emily.
Or maybe it's because it's Friday the 13th, Ed. You reminded me.
It's because it's Friday the 13th.
I totally forgot. Hopefully we can get through the show. Thank you. Meantime, Apple announcing some changes this Friday in response to an uproar over its efforts to combat child pornography. The iPhone maker adding a feature which will cross-reference a database of known sexually explicit images of children with those in an image library. If the images match up, the company will conduct a human review and ultimately report that user to law enforcement. Apple now says its database will have an independent auditor. This after a chorus of complaints from privacy advocates, some consumers, and even Apple employees. Joining us now for more on this story, who else but our Bloomberg Tech reporter, Mark Gurman. So what changes did Apple announce today to address, Mark, this uproar?
So a few things. One is they finally provided the number or the threshold of how many explicit or illicit images you would need in your iCloud photo library for the alarm bells to ring at Apple to review your account. We now know that number is 30. or what they're saying is about 30, and it's variable, so that may change by the time the feature launches, end of year, or it might change elsewhere in the future. The next thing they announced is they are going to have multiple sources for their database. Originally, the main source was going to be an organization called NCMEC, which is a US-based organization that is designed to combat abuse and explicit images related to children. Now there's going to be multiple sources for that database. Apple isn't saying who else, where else they will be stationed, under which governments these organizations will be part of, but they're saying there will be more than just NCMEC. The third thing they're saying is they will have an independent auditor to verify the contents of its database. That's in response to concerns that people believe that maybe a government or other organizations may place non-child related images in that database to flag the devices of users depending on which countries they live in.
So, look, I've spoken to folks who say from the law enforcement side, they're thrilled that Apple is, instituting these changes. But I wonder, given all of the opposition, do you think Apple is going to move forward with all of this? Will they actually ship these new features?
Yes, I do. I absolutely think Apple will ship these new features. It's just a matter if there will be slight changes to their implementation. One idea floating around is Apple breaking up the cadence of the releases. If you remember, they announced 3 distinct features. They announced this iCloud photo library feature that we're discussing. They announced the feature in Messages that uses on-device AI to scan incoming and outgoing photos through the Messages app for kids 13 and under for explicit material. And they announced new components of Siri related to child abuse images and finding resources. So it's possible instead of releasing all 3 features simultaneously, they'll sort of break up that roadmap to introduce new features on its own. I do want to note, though, in our research here, that Apple's not the only company doing this. From what we found, Google, Microsoft, Adobe, Facebook, and some others have been doing this for a number of years. For Apple, this is not even the first time either. They've been doing this inside of iCloud Mail since June 2019.
So, look, there's still a lot of confusion, though. So, for example, if I take a photograph of a rash on my child to send to the doctor, which I've done many times, is that the kind of thing that's going to get flagged?
Let me break this down to you. So in that instance, and I hate to say this and to be blunt, but this is the actuality. The only way that that would be flagged is if that image of your child and their rash somehow ends up in the child pornography or child abuse database, right? These are looking for exact matches. And I would say there's probably a 0% chance that would happen to most parents. And not only would that have to happen, but it would have to happen more times than in the threshold. So in your instance, it would have to happen 30 times. I would say there's less, if possible, 0% chance of that happening.
Meantime, Apple is warning its retail employees to be prepared for questions about this from customers. Quickly, what are they telling and how are they telling these employees to respond?
So Apple knows that the retail and sales folks they have are their front line, and they're expecting retail employees at the stores and the online and sales employees to get questions about this. So they've sent around an FAQ with some of these frequently asked questions and answers to better prepare them for that influx of concern.
Okay. Mark Gurman, appreciate your reporting on this. Thanks so much for keeping us posted. Okay, coming up, the CEO of Tesla touching down in Germany as the electric car company looks to gain ground in Europe's push for EVs. There you see Elon Musk there. All the details next. And customers ordered more on Doordash in the last quarter than ever before. I'll speak with Doordash CEO Tony Xu about what happens next as the Delta variant forces more restrictions around the world. This is Bloomberg.
Hopefully this Giga Berlin, this factory here, can serve as an inspiration to people in Germany and throughout Europe for excitement about the future. I mean, we've got to be excited about the future. We've got to do things that make us want to live. You know, it cannot always be about problems every day.
Elon Musk in Germany there as he visited the country's gigafactory. The Tesla CEO says he hopes the first cars will roll out of the facility near Berlin in October or soon afterwards, pending regulatory approval. Musk was joined by Armin Laschet, the frontrunner to succeed Angela Merkel as Germany's chancellor. In other headlines, Airbnb says it'll now allow hosts and guests to sue the company over claims of sexual assault and harassment in its listings. The move lifts a mandatory arbitration clause that's been buried in its terms of service for more than a decade. The changes come after a Bloomberg Businessweek investigation into violent crimes, including rapes, at Airbnb listings, where in some instances the company paid settlements to avoid court filings. More woes for EV startup Lordstown Motors, shares falling to fresh lows after the company renewed a warning about its ability to get its debut pickup truck to market. In a regulatory filing, it said it doesn't have sufficient cash to fund commercial-scale production. Lordstown recently went public via SPAC. And Amazon Studios is moving production of the second season of its Lord of the Rings television series out of New Zealand and into the UK. The studio says the move aligns with his strategy of investing in production space across the UK. Lord of the Rings is one of the most expensive TV series ever. The first season cost $465 million. New Zealand was the location for Lord of the Rings and, of course, the Hobbit film trilogies. Coming up, Doordash CEO and co-founder Tony Xu next to talk about the demand for food delivery as COVID cases rise. And also, what about their talks to buy Instacart? What happened there? I'll ask next. This is Bloomberg. eBay giving a lackluster revenue forecast for the current quarter, suggesting the online marketplace's growth could slow as more people get vaccinated and return to pre-pandemic habits, like traveling and dining out. But President and CEO Jamie Iannone told our Caroline Hyde, Romaine Bostick, and Taylor Riggs he's confident about the track of the business. Take a listen.
But we're right on track with where we want to be, Caroline. You know, if you look at Q2, a very strong quarter overall, revenue up 11%, and came in, ahead of where all of expectations were, which is great. And as we look forward to the back half of the year, it's right on plan with what we thought. Importantly, Q2 was a great quarter for us. Also in the portfolio simplification, we sold our ad-to-event business and announced the sale of our Korea business. In total, since StubHub, that's created $20 billion of value for our shareholders. So the business is doing well and great return for our shareholders.
What's the identity here that we're going for here, Jamie? I mean, you've been obviously only there a little bit of time here relative to other CEOs in the industry here, but you've made a lot of moves already. You've made some interesting divestitures. And I'm wondering, what's the sort of general identity that you feel like you're pushing eBay towards?
Yeah, we're really leaning into where eBay can win, and that's in this non-new in season. It's a $500 billion opportunity, and it's massive. Take, for example, sneakers. We really invested in that business. We're now authenticating sneakers in both directions, and we've now authenticated close to 1 million items. We added that to high-end watches. We just announced handbags over 500. So we're changing the level of trust on the platform. We're appealing to a younger demographic. That sneaker buyer tends to be a Gen Z or a millennial. And we're leaning in category by category to make sure that we have the best experiences across eBay. And it's really working. Those categories are growing double digits despite lapping the huge bumps from last year.
Talk to eBay's CEO there. You can catch more at Bloomberg.com. Meantime, as the world starts to reopen and indoor dining inches back, the appetite for takeout only has continued to grow. Doordash reported record orders for the second quarter, topping 345 million, more than in the entire history of the company, though they caution that consumer behavior still remains uncertain. Joining me now to discuss these trends in our Retail Transformed weekly segment, Doordash CEO Tony Xu. Tony, great to have you with us. So obviously it was a record quarter, and I'm so curious, how does this happen as restaurants are reopening and still DoorDash speeds up?
It's great to be with you, Emily. Well, I think what you saw in our quarter is that there really are two types of dining behavior, and that you can dine in while you also dine out. And I think, the sticky behavior that we've seen so far in 2021, even though we're largely in a recovery year, although I recognize that the pandemic isn't yet entirely behind us, compared to 2020, where we were largely in the pandemic or heading into the pandemic, you're still seeing most of that behavior stick around.
You forecast a potential slowing coming up ahead. And with the Delta variant ticking up, I would think that means DoorDash also speeds up. Why would it slow down?
Well, I think, a lot of the pandemic kind of sharpness in behavior has certainly been a lot more muted as all of us have figured out new ways to cope and deal with how to live in this environment. And that's why I don't think you're going to see any large changes in behavior as a result of the pandemic. So instead, what you actually see in our guidance is the seasonality that's actually reflected. And this was happening every year that DoorDash has been around. It certainly was masked during the year of 2020, where we were living under a pandemic. But in a more normal year where we've kind of, as consumers been used to living in this way, you see that in the summer months, people are vacationing again, people are eating out again, and as a result, ordering less from home. So some of that seasonality is what you see baked into our guidance.
Meantime, the big story of the week, Tony, that DoorDash was in talks to buy Instacart at a 40 or $50 billion valuation. That obviously didn't happen. Why didn't you do that deal?
Well, look, I mean, I'm not here certainly to comment on any, rumors or speculation. What I would say in general is that, at DoorDash, the bar for anything M&A has always been very high. And, when we look at opportunities in this area, we're looking for businesses that certainly can help us enter or accelerate into an attractive market, whether it be a geography or a new line of business, businesses that can help increase our potential for long-term profits, as well as businesses that give us extra management bandwidth. As it's always about execution, and unless an opportunity is management accretive, you really can't achieve, I think, all of the goals behind something with M&A. So look, for us, without commenting on anything specific, what I would say is that that's kind of how we view the lens of anything M&A.
So what's the move in grocery without this, and perhaps the opportunity to reach retailers that might not be happy with Instacart, and especially, in non-restaurant categories?
Well, I think we're so early in all of these categories. I mean, if you take our core business of restaurants, where we're the leading platform in the U.S., we're still single-digit percentages of the overall restaurant industry. Restaurants had their best quarter ever in the history, and they're already far or at their pre-COVID levels, which is really exciting to see. As you head into these new categories, we're even at an earlier inflection point. And I think what that says is that customers aren't yet satisfied with some of the products available to bring them online. And that's why they're not yet changing their preferences from their offline behavior. So I think there's going to be a long runway here where you're going to see a lot of invention. And what we're doing at DoorDash, to start in something like grocery, is really solving that middle of the week run for customers, where we're helping you get your items that you consume the most often, like your milk, your bread, your egg, your cereal, replenished in under 30 minutes. And that way, I think we can start building a relationship in this long runway for invention in this massive category.
So, you've really been focused on organic growth up to this point, but you're also in talks to buy a stake in the German grocery app Gorillas. I wonder, is Europe a different game because of entrenched competition there? And how big might that stake be, Tony?
Well, again, without, I think commenting on, rumors or speculation, what I would say is, I mean, you're right, Emily, in the premise of the question, which is, historically at DoorDash, we've built our way to getting to where we are. That doesn't mean that we have a religious view against M&A. It's just that the bar is really high. And, when we look at these opportunities, it really has to meet, three thresholds at the same time, which helps us enter new categories of business, increases our profit potential over the long run, and adds to the management bandwidth of our team. And that's how we view and evaluate all of these opportunities.
So, curious how your thoughts are evolving on M&A with a new head of the FTC, all of this antitrust scrutiny. How does that play into, the deals you explore and whether you do them or not?
Well, I think when I look at where our business is today, where we're a single percentage point of, our core business of restaurants, and as you add in these other categories, we are even much, much smaller, a tiny, tiny fraction of the amount of sales that's being generated online. And if I were to, expand, what we do across the board, I mean, we're just a drop in the bucket, from that lens, but again, when we look at, M&A opportunities, it's much less in the context of how an industry structure is being changed because we're so early. It's much more about the criteria I laid out and really just comparing that against where we are as a business and what our own trajectory is in our natural build.
Now, I should add that shares dropped after you reported yesterday after hours, but closed in the green today. I'm curious about the competition with Uber. As the company continues to double down there, they're seeing more new customers coming from the ride-sharing app as more people start to use that again. Do you have any concerns about ceding share to Uber in that way?
Well, I can only speak to what we've seen, and what we've seen in the marketplace is that we've continued to gain market share despite competitive actions. We gained 3 points of share in the quarter. We've gained 12 points of share now over the past 12 months. So in terms of what we're doing for our customers, it seems like it is responding in the marketplace.
Okay. Now, yesterday on the call, you got really fired up about commission caps. You called them violently unconstitutional. We've seen this permanent cap in San Francisco, a bill to do the same in New York. They've rolled off in other cities. But if other cities do add them, how long does that cost continue to drag?
Well, mostly what we've seen when it comes to working with cities has been a very productive relationship. In fact, when it comes to something like these commission caps and related ordinances, most of them are actually lifting. I think it's a recognition that restaurants are now seeing restaurant reservations, for example, at 90% plus of pre-COVID levels, that restaurants as an industry aggregate are seeing the highest sales ever, in spite of the fact that we're not fully recovered. And so I think it's actually been largely productive, but you're right. There are a couple of exceptions, literally countable on actually just one hand, and where I think some cities, to take even the words of their own mayors, are overstepping in terms of their actions and harming the audiences they're actually trying to help.
All right, Tony Xu, Doordash co-founder and CEO. Always good to have you here on the show, Tony. Appreciate you stopping by.
Thanks for having me.
Still ahead, we've got some big interviews. I'm talking with 23andMe CEO Anne Wojcicki about the more direct role the company wants to play in your health. Coming up, this is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. 'Tis the season for venture capital as it continues to pour in to Bay Area startups. I want to bring in our Ed Ludlow for a beat on how much funding we are actually seeing. Ed, some big raises in the last week.
Is there something in the water in San Francisco? Did a big gust of wind come through the Bay Area and wake up all the venture capitalists? In the last 24 hours alone, we've seen 3 sizable deals, big fundraisers affecting valuations, Reddit being the most notable, $700 million, taking its fundraising to the year closer to $1 billion. Of course, we all know about Reddit and what that is. But Carter, which does software so startups can manage their investors, also raising funds, $500 million. And Divvy, which helps basically potential homeowners rent and buy their home along the way. And when you look at what happens to valuations with rounds like that, really interesting. Bring up those valuations. Reddit's latest is $10 billion, up from a reported $7 billion in its latest fundraise. Carter doubled to $7.4 billion. Divvy quadrupled to $2 billion. And what's so interesting is these 3 deals alone take US startups backed by VCs, the equity investments in those startups, to $173.3 billion year to date. But this isn't just about San Francisco, Emily. It's a global story. And if we look at the funds raised in the second quarter of 2021, $156.2 billion in 1 quarter alone globally. That's venture capital into startups. You can see that whatever's going on with the pandemic, VCs are not deterred. In fact, this is the latest second quarter. Go to the second quarter a year ago, 2020. We've more than doubled the money that's going into startups, and certainly more than pre-pandemic levels as well. So those are the numbers. That's what's happening. I don't know the reason why. Maybe startups need support. Maybe these VCs are bullish about the economy coming out of the pandemic. But there is certainly activity. And as you know, Emily, it keeps me on my toes.
All right, Ed, thanks so much. For more now, let's dig into why San Francisco and venture capital has suddenly woken up and how this is all evolving as remote work continues across Silicon Valley, startups and venture capital firms. I want to bring in our deals reporter, Katie Roof. So, Katie, first of all, look, obviously, always these fundraisings happen earlier, and then it just seems to be that in this case, a bunch got reported at the same time. Or is there something in the water?
Sure. Well, I mean, it's been pretty active for quite some time. This last year, it just seems like day after day, there's a new unicorn, maybe 2 unicorns a day. Things are growing really fast. A lot of startups are seeing their valuations quadruple year over year because it's actually due to a few different factors. Right now, there's a lot of money in the ecosystem, and so that competition is driving up prices because VCs have had good returns for their LPs. In the past few years, LPs have been willing to put more money into lots of new funds. So there's just a lot of capital to deploy that's out there right now. And so it's gotten so competitive with Tiger Global and a lot of these, big firms putting in money. And so sometimes founders are taking the highest valuation they can get. And that's part of it. It's also because on the stock market, a lot of tech stocks have done really, really well. And so those valuations, those market caps are used to justify these private valuations. They're using these sky-high multiples to say, hey, well, if that company gets, a really high multiple and it's in the same sector, then we should be able to value this company at a similarly very high multiple.
So is this a trend you think will continue or pick up, especially as we go into September when everyone gets back from their summer vacations?
So, sure. So there's mixed, sentiment on this. Obviously, there's still a lot of capital to deploy, and so investors are going to have to keep deploying this money in order to get returns for their investors. So I think funding rounds will continue for a while. Whether they will still have these same multiples, a lot of people are predicting that there will be a little bit of a correction there, at least in some of the categories. Some people don't feel like this is going to last forever. Definitely. There are going to be some hot companies that, are going to be the next Facebook and worth, a lot of money, but there are going to be some companies that actually fail to materialize. They're going to fail to achieve, these really high expectations, and it's just going to be paper money, and those valuations aren't going to be a liquidity event at that value.
So I wonder if at the same time we're seeing, bigger startups get bigger, get more fuel to continue to grow. Are we also seeing some smaller startups that just can't make it work, especially in these trying times?
Sure. So a lot of money has been put in the later stage, partly because of all these growth stage investors. So, it's always hard to launch a startup and get it off the ground in the early days and get your pitch, seen by investors and these days even meet investors, especially since so many people are working remote still. So I think, certainly a lot of this depends on the stage, but it seems like once a startup shows any traction, VCs are just chasing them down to try to get access to these startups because there's just so much money out there.
All right, Katie Roof for us there. Thanks so much for that additional context. Okay, coming up, the quest to understand the role your genes might play in a case of COVID-19. I'm speaking with 23andMe CEO Anne Wojcicki about the company's research into the connection between genomics and the coronavirus next. This is Bloomberg. With more Americans exploring booster shots on their own, the CDC's advisory committee just voted unanimously in favor of a third vaccine shot for people with weakened immune systems. Data is critical as we continue to fight the pandemic, and genetic research company 23andMe knows this all too well. The company reported its first quarter earnings as a public company with revenue of $59 million. That's 23% higher than the year prior. Joining me to discuss the state of the pandemic and more is 23andMe CEO Anne Wojcicki. Anne, thank you so much for joining us. So let's talk about your first quarter as a public company. How is that evolving in the midst of this pandemic?
It was good. You know, we're super happy to be done with the SPAC process. We're super excited to be, you know, on our journey as a public company. It was a strong first quarter for us. We are happy to continue to see that consumers, you know, consumer interest is there. It is, you know, so we're enthused. And where I think about my opportunities, it's really on the areas that I, you know, emphasized during the SPAC process, which is really therapeutics, translating all this data into therapies, and then the opportunities for us to help our customers do more and really getting more and more into that world of care and primary care.
You know, we're always so fascinated by your take on sort of public health messaging and obviously, you know, what's happening, the latest that's happening, you know, in these very difficult times. Curious what you think about the CDC and these booster recommendations and the continued confusion around boosters themselves.
I think it's hard. I think people just don't have a strong understanding of how they work, how the vaccines work. And I think it's something even I was reading about, you know, Andy Slavitt was posting on things the other day on Twitter, and how, you know, with Delta variant that you can potentially get like a significant number of, you know, a significant amount of virus in your nose where your, you know, the antibodies just aren't going to be able to combat it. And so you might need to have, you know, for the immunocompromised, you're going to potentially need to have the additional boosters, and that there's also just the reality that, you know, the vaccine is going to prevent the severe infection, but not going to prevent infection in general. So I do think that there's still a lot that the you know, scientists are learning, and a lot that the world is figuring out, and a lot of misinformation. But the most important thing is for people getting vaccinated, and for, you know, researchers to be empowered to continue to study it.
So, you know, what do you think of the public health messaging here? What do you think of the messaging that's coming from the CDC? Are they being fast enough? Are they being transparent enough? Yesterday, I had the CEO of Kinsa on the show, who said, I'm going to get a booster when I can. I'm doing the same for my family to protect myself.
Well, I'd say the area that's the most controversial in the world I live in is whether or not children should actually have this 4 months of, or I don't know if it's 4 or the 6 months of follow-up versus what they did for adults. So I do think that there's a lot of parents, and I'm one of those included, that is saying, you know, our kids are going back to school, and I would love to actually have my kids vaccinated. So I do think that, you know, the messaging is in part reflective of the fact that we are in a very dynamic state where we're constantly learning something new. And I do, again, my experience of working with the FDA and with other groups is I do have faith in the public health systems, and I have been encouraged by them updating, and they do tend to be cautious. But I am, for instance, pushing to be able to get my daughter vaccinated sooner rather than later.
All right. Now, 23andMe has been researching the connection between genes and COVID to better understand if you catch it, how will it affect you? You found some fascinating connections with blood type, you know, severity and connections there. You're now researching other things like long COVID. What else are you hoping to find?
Well, long COVID, I think, is just fascinating, and it's going to be an issue. And I think, frankly, it's not unique just with COVID here. You actually have a number of viral infections that have this kind of long tail. So I do, you know, I push the team to say, let's, you know, we have this incredible survey infrastructure where we can easily reach out to our customers. And I think long COVID is going to be a big public health concern. So we should embark on that research now. So we are talking about putting out that surveys. We'll put it out at some point and really see whether or not we can understand long COVID better. We did recently also find these genetic associations with the olfactory genes, and why some people are likely to lose their sense of smell. So that, again, is, you know, again, it's a piece of the puzzle that we're trying to contribute to.
Meantime, your collaboration with GSK, you've got 40 or so various programs in development. Talk to us more specifically about what you're most excited about, where you're most excited to see some breakthroughs.
Well, I I have to say, I love drug discovery is one of the most interesting areas, and it's also such a challenging problem. So in such a short time frame, 23andMe has been able to collaboratively develop over 40 programs with GSK. We've said that GSK has CD96, their first program that is in the clinic now in phase 1, and 23andMe has a program that is solely owned behind it called P006 that we have said would potentially be in the clinic before March of next year, or end of March of next year. So I'm really enthused because I think that genetics really has this opportunity to make drug development more successful and faster. And so for 23andMe to be able to say, we're empowering these customers to come together, and now we're actually going to really help you benefit from the human genome by actually now having treatments and cures that have come from this crowdsourced community is going to be amazing. So I'm really enthused about, our lead program that we have in collaboration with GSK, and I'm really enthused about the program that we have entirely on our own.
You're also doing some really interesting research in women's health and recently published on reproductive aging in women. What are you finding there that we didn't know before?
Oh, to be honest, one of the things that's fascinating about 23andMe is we do research at scale. And so we have this ability, we can ask thousands and thousands of questions to our customers. And so frankly, I lose track of all the research that is coming out. We have so many discoveries that are coming. And what I really like, when we started this company, I set out to say, I want to be able to create research at scale so that we can answer hundreds and thousands of questions, almost all at the same time. So to be honest, I haven't read that paper.
So then talk to us a little bit more about your evolving role in playing a greater role in our health. You've got this 23andMe Plus premium subscription service. Talk to us about how you see that expanding.
Well, what's so interesting, when we started the company, and Francis Collins, who's the director of NIH, he came out years ago and said, genetics has the opportunity to help people prevent, predict, and treat all human disease. And what, frankly, I'm most excited about is this area called polygenic risk scores. And this is where we can help every single person understand what their inherent risk is for all common diseases. And what's exciting there is that if you have a risk factor, for instance, something like type 2 diabetes, can you identify early the opportunity to change people? So can you not necessarily just focus on the treatment, but really help people prevent? And so there's areas that we just absolutely miss, like glaucoma is a really interesting area that we've talked a lot about, where if you have glaucoma information, you could 100% get people actually thinking about preventing or diagnosing earlier.
Anne Wojcicki, CEO of 23andMe, thanks so much for joining us. Great to have you. All right, coming up, Sofi plunging after President Biden extends the moratorium on student loans, refinancing those loans, big part of their business. We're going to talk to Anthony Noto next. Shares of Sofi plunging 14% Friday after the company reported wider than expected losses per share for the quarter. I caught up with Sofi's CEO Anthony Noto a short while ago and asked about the impact of President Biden's announcement.
I think investors really appreciate the success of the strategy and hitting record results with $237 million of revenue, up 74% in our fourth quarter of consecutive positive EBITDA. But the fact that the student loan moratorium, which was supposed to end on September 30th of this year, got pushed back until January 31st of 2022, that caused us not to raise our full year guidance. We've been guiding to $980 million of revenue since January, and we've beaten both the first and second quarter. So I think people wanted to see us raise the estimate again, but we will lose about $40 million of revenue in the back half of the year that will push into next year because of that delay. But the rest of our business is strong enough to offset that, just not enough for us to raise estimates at this time. And so I think that was one factor. And then also, when you become a public company, that first quarter that you report, there's a lot of costs associated with the transaction, as well as some non-cash charges that impact the reported EPS number. So I think there's some confusion around the reported number. But we want to maximize value for shareholders and execute on our strategy, and that's delivering record results and accelerating growth.
SoFi has such an interesting and unique view into the health of consumers and students. And I'm so curious, going into lockdown, then out of lockdown, now maybe back into lockdown, how would you gauge the health of consumers, the economic stability of consumers right now?
I would say the stability is really strong. We see spending trends continue to be relatively stable. We're benefiting from faster growth than just spending trends because people are switching their payments from physical to digital, and they're doing more at home banking, especially on the back of COVID, and realizing they can do everything from their mobile phone at SoFi. So we're benefiting from a secular transition from physical banking to digital, which is allowing us to grow much faster than the overall economy. I think investors are much more aware of the fact that to achieve financial independence, to reach their goals, they have to invest early. And so we're seeing great tailwinds behind SoFi Invest and people investing in robo accounts as well as single stocks and ETFs. So the behavior has been quite positive, and the awareness and access to investing has become a lot more plentiful.
On that note, both SoFi and Robinhood are targeting new investors, investors with less experience for these investment products. How much progress are you making winning customers that you think would otherwise go to Robinhood? What's the hard sell?
We're making great progress. We had over 200% year-over-year growth in total accounts exceeding 1 million for the first time. Our invest product's very different. So we pioneered fractional shares. We do not charge for fractional shares. We do not charge for single stocks. We have 6 of our own SoFi ETFs that are uniquely created for millennials and Gen Z. We also offer 6 robo accounts, auto investing, and then cryptocurrency.
There's a lot of talk about gaming replacing day trading when it comes to the attention of young people and the pandemic and the way they spend that attention on their mobile devices. How do you see that playing out?
Yeah, our investors are really taking a long-term view. The behavior that we see on a platform is about investing in dollar cost averaging. We're seeing a significant increase in recurring investments being set up, and we've created price points that allow people to diversify more easily. We have 2 ETFs that offer 500 stocks in the ETF, and those are at $10 price points. The day trading that other platforms are experiencing, we just don't see those statistics on our platform. From a regulatory standpoint, if someone does drive the behavior of a day trader, you have to block their account. And so we're monitoring trading all the time. We have very low incidence of the number of people that are doing 3 or more trades in a given day. It's less than 1% of our accounts have more than 3 trades in one day.
Meantime, I'd love to hear where your crypto offerings are going. You're offering crypto rewards for credit offerings. What are the next advancements in crypto for SoFi?
We continue to hear from investors. They want more and more selection and alternative asset classes besides stocks. And one of the things we did was added an ETF called TGIF. It's a fixed income ETF that pays a dividend every Friday. In addition to that, we heard that they wanted more selection within cryptocurrency. We originally offered Bitcoin and Ethereum and Litecoin, and we just added 16 new coins, including Dogecoin. So we want to give them the best selection they could have, and we continue to listen to what they're looking for. So we're evaluating other alternative asset classes beyond cryptocurrency and robo and single stocks, looking at things like NFTs, and also looking at other asset classes like real estate and private equity. Those have different requirements from a sophistication standpoint and qualified investor standpoint, but we want to continue to expand the selection.
And how do you see the uptake in your IPO product going?
The demand for the IPO product broadly across the industry from retail is very high. It's not a product that Main Street has typically had access to at IPO prices. And so we've done 5 total IPOs so far, and we look for continued opportunities to bring that unique selection to our members as well. It's definitely something that we know our members want and something they haven't had access to in the past.
How are you thinking about the return to the office right now? What's the policy? Are you experimenting, or are you going to be changing some of your workforce policies for good?
from a long-term standpoint, we did change our policy for good. We're allowing each individual employee to talk to their manager about their workplace, whether it's one of our 10 offices throughout the United States, LATAM or Hong Kong, or their home. And so we added the home as a potential work office place for them. And it's up to them to work with their manager and making the decision on, do they work from home? Do they work from the office? Do they have a hybrid approach? In the near term, we're putting the health and safety of our employees first and foremost. We originally had planned to come back to work in October for those that will work in the workplace. We're going to delay that now to later in the year, just given the significant increase we've seen in COVID cases tied to the Delta variant. And we're experiencing that firsthand with friends and family, and it's a real risk. So we're going to delay the return to the workplace. We've had a phenomenal year and a half, despite the challenges of the pandemic and all the destruction it's created in individuals' lives. The company's performed quite remarkably with a lot of milestones. So we're perfectly comfortable working from home if that continues for the foreseeable future.
Sofi's Anthony Noto there. Meantime, Boeing's plan to convince NASA that its Starliner craft can safely and reliably ferry crews to the ISS suffered a setback. A problem with the capsule's propulsion system means the next planned mission may not happen now until next year. Crews have been trying to troubleshoot while the capsule was sitting on top of the rocket. It'll be removed for deeper level troubleshooting. And that does it for this edition of Bloomberg Technology. Stay with us. David Weston coming up next with Wall Street Week. He'll be joined by former Treasury Secretary Larry Summers and Steve Ratner of Willett Advisors. I'm Emily Chang in San Francisco. This is Bloomberg.